Hello and welcome again. This is your host Harshit Simha. Continuing from the previous week discussion, today now discusses the second part on the global reach and adoption of Sustainability Accounting Standards Board, SASB. Standards signify a decisive evolution in sustainability reporting, positioning ESG disclosures as integral to financial decision-making. SASB's industry-specific and financially material approach enables organizations across jurisdictions to produce consistent, comparable, and investor-relevant information, thereby strengthening transparency in global capital markets. At the forefront is sustainability reporting, where SASB guides companies in identifying and disclosing ESG risks and opportunities that directly influence enterprise value. Its structured methodology enhances comparability across sectors and supports alignment with investor expectations. An important operational dimension is fees in licensing, which relates to access to advanced tools, professional resources, and implementation support. While the standards themselves are widely accessible, licensing elements ensure continued development, quality assurance, and global dissemination. The FSA Credential, Fundamentals of Sustainability Accounting, serves as a globally recognized professional certification, equipping practitioners with the knowledge and analytical capability to apply SASB standards effectively. It plays a vital role in building institutional capacity and enhancing the credibility of sustainability disclosures. Collaboration is further strengthened through the Sector Sustainability Alliance, which promotes industry engagement, knowledge sharing, and alignment of sector-specific sustainability practices. This collective approach accelerates adoption and fosters consistency across industries. Central to SASB's application is the Sustainable Industry Classification System, SICS, which classifies companies into 77 industries, ensuring that disclosures are tailored to sector-specific risks and opportunities. Finally, SASB is embedded within the Global Sustainability Disclosure Architecture under the IFRS Foundation and ISSB. This integration contributes to a harmonized global baseline, reducing fragmentation and advancing a unified, investor-focused sustainability reporting ecosystem. Now let us explore the topic in detail. Slide 2. Who is reporting with SASB standards? The main topic of this section is to identify and understand who is reporting using SASB standards and the structured process through which organizations are recognized as SASB reporters within the global sustainability reporting ecosystem. A key subtopic is companies reporting with SASB standards. A growing number of organizations across industries and jurisdictions are adopting SASB standards to disclose financially material ESG information. These companies span sectors such as financial services, manufacturing, energy, and consumer goods, reflecting SASB's global applicability. The SASB Reporter Directory provides a centralized database where stakeholders can explore companies reporting under SASB, filterable by industry, sector, country, and reporting year, thereby enhancing transparency and comparability. Another important subtopic is getting listed as a SASB reporter, which outlines the criteria for formal recognition. The first requirement is reference SASB standards, where companies must explicitly state in their disclosures that SASB standards have been used. This ensures clarity and credibility in reporting. The second step is use metric codes, where organizations are encouraged to incorporate SASB metric codes within their disclosures. This facilitates precise identification of reported data and enhances comparability across companies and industries. The third subtopic is notify the IFRS Foundation. While not mandatory, companies are encouraged to inform the IFRS Foundation about their use of SASB standards. This helps maintain an up-to-date global registry of reporters and supports continuous improvement through stakeholder feedback. Slide 3. Fees, licensing and education. The main topic of this slide is understanding the accessibility, cost structure, and educational ecosystem surrounding SASB standards. A key subtopic is there a fee to disclose? SASB standards are free for non-commercial use, allowing companies to use all 77 industry standards for investor disclosures and academic research without any cost. This accessibility promotes widespread adoption and ensures inclusivity in sustainability reporting. Another important subtopic is IFRS S1 and S2 licensing is emphasized, where companies must refer to IFRS licensing guidelines for sustainability disclosures under ISSB. The slide also highlights non-commercial use vs commercial use. Non-commercial use includes corporate disclosures and research, whereas commercial use involves monetized applications. This distinction ensures fairness while encouraging broad utilization. Additionally, licensing SASB standards. While non-commercial use is free, commercial applications require licensing. Organizations integrating SASB into investment tools, ESG analytics platforms, or reporting software must pay fees. This ensures sustainability of the framework and supports continuous development. Finally, education and capacity building underpins the importance of developing expertise through structured learning programs. These initiatives enable professionals to understand financial materiality and ESG integration. In summary, SASB balances free accessibility with structured licensing, ensuring both global adoption and long-term sustainability of standards. Slide 4. The FSA Credential. The main topic of this slide is the FSA Credential, Fundamentals of Sustainability Accounting, a globally recognized professional certification designed to build expertise in sustainability disclosure and financial materiality. A key subtopic is, what is the FSA Credential, which focuses on equipping professionals with the knowledge to understand how sustainability factors influence a company's financial performance. It bridges the gap between ESG concepts and financial analysis, making sustainability information actionable for decision-making. Another important subtopic is, who it's for. The credential is primarily intended for professionals in investment analysis, consulting, corporate sustainability, and finance. It is particularly valuable for those involved in ESG reporting, risk assessment, and capital allocation. The slide also highlights global relevance, which has significantly increased following SASB's integration into the IFRS Foundation. This transition ensures that the FSA Credential aligns with globally accepted sustainability disclosure standards, including ISSB frameworks, thereby enhancing its international recognition and applicability. Additionally, updated materials is an essential subtopic. The curriculum, especially at Level 1, has been updated to reflect the evolving sustainability disclosure environment, incorporating developments such as IFRS S1 and IFRS S2. In conclusion, the FSA Credential plays a vital role in building professional capacity, enabling individuals to deliver high-quality, investor-focused sustainability disclosures in a globally standardized reporting landscape. Slide 5. The IFRS Sustainability Alliance. The main topic of this slide is the IFRS Sustainability Alliance, a global collaborative platform that strengthens the adoption and implementation of sustainability reporting standards. A key subtopic is formation of the alliance, which highlights the merger of the former SASB Alliance with the business network. This integration brought together a diverse group of organizations committed to advancing sustainability disclosure and integrated reporting practices under a unified framework. Another important subtopic is Global Community for Sustainability Standards. The IFRS Sustainability Alliance functions as an inclusive network of companies, investors, and institutions that support the development and application of high-quality sustainability standards. It fosters engagement, knowledge sharing, and alignment across industries and geographies. The slide also emphasizes shared vision and purpose, where members collectively believe in the importance of a coherent and comprehensive corporate disclosure system. This vision promotes the integration of financial and sustainability information, enabling organizations to communicate how they create long-term value. Additionally, the Alliance supports integrated thinking and reporting, encouraging organizations to align strategy, governance, and performance with sustainability objectives. In conclusion, the IFRS Sustainability Alliance plays a crucial role in building a connected ecosystem that enhances consistency, comparability, and credibility in global sustainability reporting, thereby supporting informed decision-making and long-term value creation. Slide 6. SICS Sectors, Grouping by Sustainability Risk Profile. The main topic of this slide is the Sustainable Industry Classification System, SICS, and its role in organizing industries based on shared sustainability risk characteristics rather than traditional economic classifications. A key subtopic is SICS framework structure, which groups 77 industries into 11 sectors. This structure ensures that companies are categorized according to similar sustainability risk exposures, enabling more meaningful and comparable ESG disclosures. Another important subtopic is risk-based classification approach. Unlike conventional classification systems that focus on revenue or economic activity, SICS emphasizes sustainability risk profiles. This allows organizations to identify ESG issues that are most likely to impact financial performance, thereby aligning reporting with investor expectations. The slide also highlights sector examples and key risks. For instance, the consumer goods sector focuses on product safety, supply chain labor, and packaging waste. The extractives sector emphasizes greenhouse gas emissions, water management, and community relations. Similarly, the financial sector addresses financed emissions and systemic risk, while the food and beverage sector concentrates on water usage, food safety, and nutrition. These examples demonstrate how SICS aligns industries with their most material sustainability challenges. Another subtopic is enhanced comparability and relevance, where grouping by sustainability risks ensures that disclosures are consistent across companies facing similar challenges. In conclusion, SICS provides a robust, risk-oriented classification system that enhances the precision, comparability, and investor relevance of sustainability reporting by aligning industries with their most critical ESG risk factors. Slide 7. SASB Standards Content, Sector Overview. The main topic of this slide is the sector-based organization of SASB Standards, which enhances clarity, usability, and relevance in sustainability reporting by grouping industries according to shared risk characteristics. A key subtopic is sector-based organization, where SASB standards are structured into sectors, each containing multiple industry-specific standards. This organization simplifies navigation and enables companies to quickly identify the relevant standards applicable to their operations. Another important subtopic is industry-specific standards within each sector. Each sector comprises several industries, and each industry has its own tailored set of disclosure topics and metrics. This ensures that sustainability reporting reflects the unique ESG risk profile of each business, rather than applying a one-size-fits-all approach. The slide also emphasizes alignment with sustainability risk profiles. By grouping industries based on similar sustainability risks, SASB ensures that companies within a sector address comparable issues such as energy use, emissions, workforce safety, or resource management. This enhances consistency and allows investors to make meaningful comparisons across companies operating in similar environments. Another subtopic is improved comparability and decision usefulness. Sector-based organization ensures that disclosures are standardized within industries while remaining relevant to specific business contexts. This balance improves transparency and supports informed investment decisions. In conclusion, the sector overview of SASB standards provides a structured framework that aligns industries with their sustainability risks, enabling precise, comparable, and investor-focused ESG disclosures across the global reporting landscape. Slide 8. Energy management across industries. The main topic of this slide is energy management as a cross-cutting sustainability issue within SASB Standards, highlighting its widespread relevance across industries and its direct linkage to financial performance. A key subtopic is prevalence across industries, where energy management appears in 35 of the 77 SASB industries. This demonstrates that energy consumption is not limited to traditionally energy-intensive sectors but is a critical factor influencing cost structures, operational efficiency, and environmental impact across a wide range of businesses. Another important subtopic is total energy consumed, which measures the overall energy usage of an organization, typically expressed in gigajoules (GJ). This metric is often broken down by fuel type and energy source, providing insights into operational intensity and efficiency. It allows investors to evaluate how effectively a company manages its energy inputs. The slide also highlights renewable versus conventional energy, which reflects the proportion of energy derived from renewable sources compared to conventional fossil fuels. This metric is increasingly important in assessing a company's transition toward low-carbon operations and its exposure to regulatory and market risks associated with climate change. Another critical subtopic is self-generated versus purchased energy, distinguishing between energy produced internally and energy procured from external suppliers. This helps assess energy independence, cost stability, and investment in sustainable infrastructure. In conclusion, energy management metrics provide consistent and comparable data across industries, enabling stakeholders to assess operational efficiency, environmental impact, and transition readiness, thereby reinforcing the financial materiality of sustainability performance. Slide 9. Employee health and safety. The main topic of this slide is employee health and safety as a critical sustainability factor within SASB Standards, reflecting its direct impact on operational performance, regulatory compliance, and long-term value creation. A key subtopic is prevalence across industries, where employee health and safety metrics appear in 26 of the 77 SASB industries. This widespread inclusion highlights that workforce safety is not confined to high-risk sectors but is a universal concern affecting productivity and business continuity. Another important subtopic is standardized cross-industry metrics. SASB provides consistent metrics, such as injury rates, lost time incidents, and safety management practices, that enable comparability across companies and industries. These standardized indicators help investors evaluate how effectively organizations manage workforce-related risks. The slide also emphasizes workforce risk management, where strong health and safety practices reduce accidents, legal liabilities, and operational disruptions. Effective safety management systems contribute to improved employee morale and retention, thereby enhancing organizational efficiency. Additionally, financial and strategic implications are highlighted. Poor safety performance can lead to regulatory penalties, reputational damage, and increased costs, while strong performance signals resilience and responsible governance. In conclusion, employee health and safety is a financially material ESG factor, and SASB's standardized metrics enable transparent, comparable, and decision-useful disclosures that support investor confidence and sustainable business operations. Slide 10. Water management metrics. The main topic of this slide is water management metrics within SASB Standards, emphasizing water as a critical sustainability factor with direct financial and operational implications across industries. A key subtopic is total water withdrawn, which measures the volume of water extracted from all sources, including surface water, groundwater, and municipal supplies. This metric provides insight into a company's dependency on water resources and its operational intensity. Another important subtopic is water in stressed areas, which identifies the proportion of water withdrawn from regions experiencing high or extremely high water stress. This indicator is crucial for assessing exposure to physical risks such as scarcity, regulatory restrictions, and supply disruptions. The slide also highlights water recycled and reused, reflecting the percentage of water that is treated and reused within operations. This metric demonstrates operational efficiency, resource optimization, and a company's ability to mitigate water-related risks. Additionally, water management metrics appear in 25 of the 77 SASB industries, underscoring their widespread financial relevance across sectors. In conclusion, these metrics enable organizations to transparently report water usage, assess risk exposure, and demonstrate responsible resource management. For investors, they provide decision-useful insights into operational resilience, regulatory compliance, and long-term sustainability performance. Slide 11. Consumer Goods Sector. The main topic of this slide is the consumer goods sector within the SICS framework, highlighting its unique sustainability challenges and their financial implications. A key subtopic is product safety, which focuses on risks related to product recalls, liability exposure, and compliance with regulatory standards. Failures in product safety can lead to significant financial losses, legal consequences, and reputational damage, making it a critical area for disclosure. Another important subtopic is supply chain labor, addressing human rights and labor practices across global sourcing networks. Companies in this sector often rely on complex supply chains, where risks such as poor working conditions, child labor, or non-compliance with labor laws can impact brand value and investor confidence. The slide also emphasizes packaging waste, which relates to environmental concerns and regulatory pressures around waste management. Increasingly stringent regulations, such as Extended Producer Responsibility (EPR), require companies to manage the life cycle impact of their packaging. This has direct cost implications and influences corporate sustainability strategies. These sustainability issues are particularly visible and reputationally sensitive, as consumer-facing companies are subject to heightened scrutiny from regulators, investors, and customers. In conclusion, the consumer goods sector must proactively manage these material ESG risks to ensure compliance, protect brand integrity, and support long-term value creation, making SASB disclosures highly relevant and decision-useful. Slide 12. Extractives and Minerals Processing. The main topic of this slide is the extractives and minerals processing sector, which represents one of the most environmentally and socially impactful industries within the SICS framework, characterized by high financial exposure to sustainability risks. A key subtopic is GHG emissions, as this sector is highly carbon intensive. Companies face increasing exposure to carbon pricing, emissions regulations, and transition risks associated with the global shift toward low-carbon economies. Effective emissions management is therefore critical for maintaining competitiveness and compliance. Another important subtopic is water management, given the sector's heavy reliance on water resources. Risks include water scarcity, contamination, and regulatory constraints, all of which can disrupt operations and increase costs. Proper water stewardship is essential for operational continuity and environmental compliance. The slide also highlights tailings management, referring to the storage and handling of mining waste. Failures in tailings management can lead to catastrophic environmental damage, significant financial liabilities, and severe reputational harm, making it a highly material risk factor. Additionally, community relations is emphasized, as extractive activities often occur in sensitive regions. Maintaining a social license to operate requires effective stakeholder engagement, responsible practices, and respect for local communities. In conclusion, the sector's sustainability risks are deeply intertwined with financial performance, making SASB disclosures essential for transparency, risk management, and long-term value creation. Slide 13. The Global Sustainability Disclosure Architecture. The main topic of this slide is the Global Sustainability Disclosure Architecture, which outlines how different frameworks and standards integrate to form a coherent and investor-focused reporting system. A key subtopic is SASB as the foundational layer. SASB standards provide industry-specific metrics and guidance, forming the base of the global architecture. They enable companies to identify financially material sustainability risks and opportunities, ensuring disclosures are relevant and decision-useful. Another important subtopic is integration with IFRS S1 and IFRS S2. Under the ISSB framework, IFRS S1 establishes general sustainability disclosure requirements, while IFRS S2 focuses on climate-related information. SASB standards complement these by offering detailed, industry-based metrics that make these broader standards actionable for companies. The slide also highlights coherent and unified system, where the integration of SASB with ISSB reduces fragmentation across multiple ESG frameworks. This alignment supports consistency, comparability, and transparency in global reporting practices. Additionally, investor-focused disclosures is emphasized, ensuring that sustainability information is aligned with financial reporting and useful for capital allocation decisions. In conclusion, the Global Sustainability Disclosure Architecture positions SASB as a critical bridge between high-level frameworks and practical implementation, enabling organizations to deliver standardized, comparable, and financially material sustainability disclosures on a global scale. Slide 14. SASB Standards as a bridge to ISSB and ISSB's commitment to SASB standards. The main topic of this slide is the role of SASB standards as a bridge to the ISSB framework, alongside the ISSB's ongoing commitment to maintaining and enhancing these standards for global applicability. A key subtopic is SASB standards as a bridge to ISSB. SASB provides industry-specific guidance that helps organizations identify and disclose sustainability-related risks and opportunities. Under IFRS S1, companies are required to consider SASB standards when determining material sustainability topics, while IFRS S2 incorporates SASB-derived metrics for climate-related disclosures. This makes SASB a practical implementation tool within the broader ISSB framework. Another important subtopic is maintained under ISSB. The ISSB has assumed responsibility for overseeing all 77 SASB standards. A dedicated group ensures continuous updates and alignment with global sustainability priorities, reinforcing their relevance and credibility. The slide also highlights public consultation process, where any amendments to SASB standards undergo a rigorous exposure draft process. This ensures transparency, stakeholder engagement, and high-quality standard setting. Additionally, international applicability is emphasized, with enhancements completed to ensure SASB standards are usable across different jurisdictions and regulatory environments. This strengthens their role in a global reporting baseline. Another subtopic is implementation pathway, where companies are encouraged to first use SASB standards to identify material issues, then apply IFRS S1 and S2 to structure disclosures, ultimately achieving globally comparable reporting. In conclusion, SASB standards serve as a critical operational bridge within the ISSB ecosystem, supported by a strong commitment to continuous improvement, ensuring consistency, comparability, and investor relevance in sustainability disclosures. Slide 15. The SASB Standards Navigator. The main topic of this slide is the SASB Standards Navigator, a central digital tool designed to support companies and investors in accessing and applying SASB standards effectively. A key subtopic is all 77 standards access. The Navigator provides comprehensive access to all 77 industry-specific SASB standards, organized by sector. This structured interface enables users to quickly identify the relevant standard for their business and understand the associated disclosure topics and metrics. It simplifies navigation and ensures that companies can efficiently begin their sustainability reporting journey. Another important subtopic is Materiality Finder. This feature is particularly valuable for investors and analysts, as it offers a visual tool to assess exposure to various sustainability risks and opportunities across industries. By mapping ESG topics to financial relevance, the Materiality Finder supports more informed investment decisions and portfolio analysis. The slide also highlights Reporter Directory, which allows users to explore companies that are already reporting using SASB standards. This directory can be filtered by industry, sector, country, and reporting year, providing insights into peer practices and enhancing benchmarking capabilities. Additionally, the Navigator acts as a practical implementation gateway, helping organizations transition from understanding standards to actual disclosure. In conclusion, the SASB Standards Navigator is an essential resource that enhances accessibility, usability, and transparency. By integrating tools such as the Materiality Finder and Reporter Directory, it supports both companies and investors in delivering and analyzing consistent, comparable, and decision-useful sustainability disclosures. Slide 16, Implementation Resources. The main topic of this slide is implementation resources, which provide practical guidance and support to organizations adopting SASB standards, ensuring effective and consistent sustainability disclosures. A key subtopic is Implementation Primer, a foundational resource that offers step-by-step guidance for companies beginning their SASB reporting journey. It explains how to identify relevant industry standards, interpret disclosure topics, and integrate sustainability information into existing reporting processes. Another important subtopic is case studies and Q&As, which present real-world examples from companies already applying SASB standards. These practical insights help organizations understand common challenges, best practices, and effective reporting techniques, making implementation more accessible and actionable. The slide also highlights Application Guidance, which provides detailed instructions on disclosing information related to governance, strategy, and risk management. This ensures that sustainability disclosures are aligned with broader financial reporting frameworks such as IFRS and support investor decision-making. Additionally, Knowledge Hub is emphasized as a comprehensive repository of resources, including bulletins and updates on emerging topics such as climate risk, human capital management, and evolving ESG issues. This ensures that companies remain informed and aligned with current global standards. In conclusion, these implementation resources collectively support organizations at every stage of their sustainability reporting journey. By combining structured guidance, practical examples, and continuous learning tools, SASB enables companies to produce high-quality, consistent, and investor-focused disclosures aligned with global best practices. Slide 17. Applying SASB Standards, Key Principles. The main topic of this slide is the key principles for effectively applying SASB standards, ensuring that sustainability disclosures remain relevant, consistent, and aligned with financial reporting practices. A primary subtopic is Industry-First Approach. Organizations should begin by identifying their appropriate SICS industry classification and applying the corresponding SASB standard. This ensures that disclosures focus on the most financially material sustainability risks and opportunities specific to their business. Another important subtopic is Explain Omissions. If a company chooses to omit or modify a SASB metric, it must provide a clear and transparent explanation. This requirement enhances accountability and ensures that stakeholders understand the rationale behind reporting decisions. The slide also highlights alignment with financial reporting. Sustainability disclosures should be consistent with financial reporting practices under frameworks such as IFRS or GAAP. This alignment ensures coherence between financial and non-financial information, improving credibility and decision usefulness for investors. Additionally, these principles emphasize disciplined judgment and transparency, allowing companies to tailor disclosures while maintaining comparability. In conclusion, applying SASB standards effectively requires an industry-focused approach, transparent reporting practices, and alignment with financial frameworks, enabling organizations to deliver credible, consistent, and investor-relevant sustainability disclosures. Slide 18, SASB Standards and Materiality. The main topic of this slide is the concept of materiality in SASB standards, emphasizing the distinction between what SASB provides and what companies are ultimately responsible for determining in their disclosures. A key subtopic is what SASB standards do. SASB identifies a set of sustainability topics that are most likely to be financially material for a typical company within a given industry. These topics are derived from rigorous research and market evidence, helping organizations focus on ESG issues that could influence investor decision-making, such as climate risk, human capital, or resource management. Another important subtopic is what companies must do. While SASB provides a structured starting point, companies retain full responsibility for conducting their own materiality assessment. This involves evaluating which sustainability issues are truly significant based on their specific business model, strategy, geographic exposure, and regulatory environment. The slide also highlights materiality as a company-specific judgment. Even within the same industry, material risks and opportunities may vary across organizations. Therefore, companies must apply professional judgment to determine which topics are relevant and should be disclosed. Additionally, SASB standards are described as an input, not a prescription. They guide but do not mandate disclosures, ensuring flexibility while maintaining consistency. In conclusion, SASB standards enhance the materiality assessment process by providing industry-relevant insights, but organizations must exercise informed judgment to ensure disclosures are accurate, relevant, and aligned with their unique business realities and investor expectations. Slide 19, Related Resources. The main topic of this slide is related resources, which support the ongoing development, application, and understanding of SASB standards within the broader ISSB framework. A key subtopic is maintaining SASB standards. This resource provides insights into the ISSB's structured and rigorous process for maintaining SASB standards. It outlines how updates are managed through a transparent due process, ensuring that standards remain relevant, credible, and aligned with evolving sustainability priorities. Another important subtopic is enhancing the SASB standards. This focuses on the ISSB's work plan to improve the international applicability of SASB standards. Enhancements address emerging ESG issues, refine metrics, and ensure consistency with global frameworks such as IFRS S1 and IFRS S2. The slide also highlights SASB standards and the ISSB, which explains how SASB standards are integrated within the ISSB framework. This resource provides guidance on applying SASB alongside IFRS sustainability disclosure standards, ensuring a cohesive and unified reporting approach. Additionally, IFRS Sustainability Alliance is emphasized as a collaborative platform where organizations can engage, share best practices, and contribute to the evolution of sustainability reporting. It fosters a global community committed to high-quality disclosures and integrated reporting. In conclusion, these related resources provide comprehensive support for organizations at all stages of their sustainability journey. By combining maintenance processes, enhancement initiatives, and collaborative platforms, they ensure that SASB standards remain dynamic, globally relevant, and aligned with investor-focused sustainability reporting requirements. Slide 20. Access the SASB Standards. The main topic of this slide is how stakeholders can access and begin using SASB standards, emphasizing ease of availability and practical entry points for companies, investors, and professionals. A key subtopic is SASB Standards Navigator access. All 77 industry-based SASB standards are available free of charge through the SASB Standards Navigator. This digital platform serves as the primary gateway for users to explore, understand, and apply relevant standards, organized by sector and industry for ease of use. Another important subtopic is for companies. Organizations are encouraged to identify their applicable industry standard, review the implementation primer, and begin disclosing sustainability-related financial information. This structured approach ensures that disclosures are aligned with investor expectations and global best practices. The slide also highlights, for investors, where tools such as the Materiality Finder enable investors to assess portfolio exposure to sustainability risks and opportunities. This supports more informed investment decisions by linking ESG factors with financial performance. Additionally, for professionals, is emphasized, encouraging individuals to pursue the FSA Credential to deepen their expertise in sustainability accounting and disclosure. This enhances professional capability and supports high-quality reporting practices. In conclusion, SASB standards are designed to be highly accessible and user-friendly. By providing free access, structured tools, and targeted resources for different stakeholders, SASB enables widespread adoption and supports the delivery of transparent, consistent, and investor-relevant sustainability disclosures. Slide 21. Common Ground, ISSB and ESRS Alignment. The main topic of this slide is the alignment between ISSB standards and the European Sustainability Reporting Standards, ESRS, highlighting the growing convergence in global sustainability reporting frameworks. A key subtopic is Climate Overlap, 100%. There is a near-complete alignment between IFRS S2, ISSB Climate Standard, and ESRS Climate Disclosures. This means that organizations reporting under ISSB can meet most ESRS climate requirements without significant duplication. Such alignment reduces reporting burden and enhances efficiency for companies operating across jurisdictions. Another important subtopic is shared definitions, approximately equals 80%. A substantial proportion of key terminology, such as definitions related to emissions, risk categories, and sustainability concepts, is consistent across ISSB and ESRS. This common language improves clarity, reduces ambiguity, and supports comparability of disclosures across global markets. The slide also highlights single reporting process. Companies can design a unified reporting system that satisfies both ISSB and ESRS requirements simultaneously. This integrated approach streamlines data collection, governance, and reporting processes, minimizing duplication while ensuring compliance with multiple regulatory frameworks. Additionally, this alignment reflects a broader trend toward global harmonization, where leading sustainability frameworks are converging to create a coherent and consistent disclosure ecosystem. It supports multinational companies in managing regulatory complexity and enhances investor confidence through standardized reporting. In conclusion, the alignment between ISSB and ESRS represents a significant step toward a globally interoperable sustainability reporting system. By enabling shared definitions, overlapping requirements, and a unified reporting process, it reduces fragmentation and supports the delivery of comparable, decision-useful, and investor-focused sustainability disclosures across global markets. Slide 22. Key takeaways. The main topic of this slide is a consolidated summary of the most critical insights from SASB standards and their integration within the global sustainability reporting framework. A key subtopic is Industry-Based Approach, 77 Standards. SASB standards are structured across 77 industry-specific standards, ensuring that sustainability disclosures are tailored to the unique risk profiles of different sectors. This industry-focused methodology enhances the relevance and precision of ESG reporting. Another important subtopic is global adoption. SASB standards are widely used by 3,200 plus companies across 80 plus jurisdictions, including a significant proportion of the S&P Global 1200 index. This widespread adoption demonstrates strong market acceptance and reinforces their credibility in global capital markets. The slide also highlights ISSB integration. SASB standards are now embedded within the ISSB framework, forming a critical component of the global baseline for sustainability disclosures. They are required to be considered under IFRS S1 and are incorporated as guidance in IFRS S2, particularly for climate-related metrics. Additionally, free access and accessibility is emphasized. All SASB standards are available free of charge for non-commercial use through the SASB Standards Navigator, promoting inclusivity and encouraging widespread adoption. In conclusion, SASB standards combine industry specificity, global adoption, ISSB integration, and accessibility, making them a cornerstone of modern sustainability reporting. They enable organizations to deliver consistent, comparable, and investor-focused disclosures, supporting informed decision-making and contributing to a more transparent and sustainable global financial system. Here, we bring the present discussion to a close. However, this certainly does not mark the end of our journey into the evolving landscape of sustainability disclosure frameworks. Beginning next week, we shall move forward to the third part of the SASB standards, shaping investor decisions through financial materiality. This module discusses how industry-specific ESG disclosure standards bridge sustainability and financial value, and what their integration into the ISSB means for investors in companies worldwide. The integration of SASB's industry-specific expertise into the ISSB's global framework marks the maturation of sustainable finance, where environmental, social, and governance factors are inseparable from the pursuit of long-term financial value. We encourage you to remain actively engaged with our channel, participate in the forthcoming sessions, and thoughtfully share these professional insights across your networks, particularly among business leaders, sustainability practitioners, compliance professionals, and stakeholders committed to advancing responsible corporate governance and transparent reporting practices. The transition toward integrated sustainability reporting is not merely a regulatory expectation. It is a strategic imperative for building resilient, accountable, and future-ready enterprises. Until then, we extend our sincere regards and appreciation for your continued association, and we look forward to welcoming you again in the next session as we continue this important journey towards stronger sustainability leadership and reporting excellence.